Okay.
Now let's look at the Thai baht's situation right now. The Thai baht traded near its weakest level in almost 5 months after overseas investors reduced holdings of the nation's stocks on concerns that elections slated for July 3rd will spark instability. The local currency has weakened 2.1% this month as global funds sold $1 billion more of Thai equities than they bought during the period, headed for the biggest monthly net sales since May 2010, the exchange data showed. Declines may be limited on optimism Greece will avoid a default on its debts, cutting demands for the relatively safety of the dollar, according to Disawat Theowanit, a foreign exchange trader at Bangkok Bank plc. Greece's parliament will vote today on an austerity package needed to secure more financial aid. We are close to the election this weekend, and investors want to unload their portfolio mostly in stock market, which pressured the Thai baht, Bangkok-based Disawat said. Some optimism about Greece before their vote today supports sentiment for regional currencies. The Thai baht traded at 30.97 per dollar as of 8:07 a.m. in Bangkok, from 30.98 yesterday, according to data compiled by Bloomberg. The currency touched 31.01 yesterday, the weakest level since January the 31st. It may be traded between 30.80 and 30.10 before the Thai election, Disawat said. Opinion polls show Prime Minister Abhisit Wejshajiwat's Democrat Party trailing Pheu Thai, led by Yingluck Shinawatra, sister of fugitive former leader Thaksin Shinawatra. Abhisit told reporters that Pheu Thai plans an amnesty for Thaksin, ousted in a 2006 coup. Of the 500 parliamentary seats up for grabs next month, 375 are chosen in districts and 125 through proportional representation. The onshore one-year interest rate swap, the fixed costs needed to receive a floating payment, added 1 basis point or 0.01 percentage point to 3.15%. The yield on the 5.25% government bond due May 2014 held a steady 3.74%, according to data compiled by Bloomberg.
Following its recent roadshow in 6 countries across Europe, where UOB Kay Hian met with more than 30 institutional clients, the securities firm thinks that they remain concerned about the Thai political climate. However, according to a report of UOB Kay Hian issued this morning, some investors are looking beyond the incremental political risk of a pro-Thaksin government. They focus more on the economy's strong fundamentals and the market's valuations. The followings are UOB Kay Hian's assessment of the Thai stock market. UOB Kay Hian suggested that the investors should buy when there's blood on the street. With the general election just a week from today, it is fair to say the politics will eventually fade from investors' focus. It believes that the market could see periods of post-election correction regardless of which party wins. A Democrat victory could prompt violent red shirt protests, and likewise, a victory by the pro-Thaksin faction increases the risk of yellow shirt demonstrations or even a military coup. UOB Kay Hian suggests a floor level of the Thai stock market at 950 or a 7% downside risk from the current level. It expects the year-end target of the Thai market at 1,248. Despite the large sell-down in recent months, the net outflows of $391 million have only forced the markets down by less than 1% year-to-date. Foreign markets have also declined, hence the Thai market, which has historically traded at a double-digit discount, now traded in line with regional peers. From an investor's standpoint, further correction could be a healthy entry point for investors. Investors who were shocked by the sell-down since Yingluck's nomination on May 11th should not forget that the Thai market rallied strongly in March. In effect, the Thai market is merely giving up earlier gains.
As analysts are afraid of Thailand's political situation escalating into mob in Greece, there's a riot as the euro fell, snapping a 2-day gain against the dollars before Greece's parliament votes today on an austerity package needed to secure more financial aid. The 17-nation currency was still headed for a second quarterly gain on speculation Greece's debt crisis won't prevent the European Central Bank from raising interest rates next week to cool inflation. Greek lawmakers vote first on the austerity package and again later on a measure implementing it. Greek police fired tear gas to disperse protesters in Athens as labor unions shut down government services before the vote on budget cuts. Losses in the euro were limited after European Central Bank President Jean-Claude Trichet yesterday said policymakers are in strong vigilance mode, boosting rate increase expectations. The European Central Bank raised its benchmark rate in April for the first time in almost 3 years, lifting it by a quarter point to 1.25%. The central bank will meet on July the 7th. The dollar traded near the strongest level against the yen in 3 weeks as Treasury yields jumped, enhancing the allure of U.S. assets. Mike Burrows, currency strategist at Bank of New Zealand Limited in Wellington, said he suspected some of the drive higher in the euro has been driven by squaring off short positions rather than reflecting a passing of the vote will actually solve the situation in Greece. The euro fell to $1.4352 at 9:20 a.m. in Tokyo from $1.4371 in New York yesterday, when it reached 1.4397, the highest since June the 22nd. It's down 0.3% against the greenback this month and up 1.4% this quarter. The shared currency declined to 116.31 yen from 116.58 after reaching 116.67 yesterday, the highest level since June the 14th. The dollar fetched 81.05 yen from 81.12. It touched 81.27 yen yesterday, the strongest since June the 2nd. Treasury 10-year yields gained 10 basis points to 3.03% yesterday, increasing the appeal to international investors.
As just recently confirmed, French Finance Minister Christine Lagarde has been named as the first woman to become the new leader of the scandal-rocked International Monetary Fund. The new IMF chief, Lagarde, replaced Dominique Strauss-Kahn, who resigned last month as managing director after being charged with sexually assaulting at New York City hotel housekeeper. Lagarde was opposed by Agustin Carsten, a Mexican central banker whose candidacy never caught fire, even among developing countries. However, she fought off Agustin for the job. She has broadened support in Europe, where she has spearheaded the region's battle against a vicious and stubborn debt crisis. She has also won support from China and Russia, according to reports in Beijing and the ITAR TASS news agency in Moscow. Lagarde is said to have backings from America and Europe and key emerging market nations, including China, India, and Brazil. According to the IMF statement, its 24-member board regarded both candidates as highly suitable for the job, but had decided on Ms. Lagarde by consensus. The new MD expressed that once the results were in, she was honored and delighted that the board has entrusted her with the position of managing director of the IMF, Lagarde said in her Twitter minutes after the announcement.
We'll be back with more economic news updates around the world after this break, so stay tuned.